Okay, so let's get started. Today is the 13th of April, Monday, 13th of April. It's a Easter Monday. So happy Easter Monday to everyone here. Give me a thumbs up if you hear that. Audio is good. All right. So as usual, today, every day I'm doing a currency call. Monday is Aussie and Kiwi. Tuesday is Euro. Wednesday is Pound. Thursday is Yen and gold. Friday is CAD and oil. So we've done that last week. We're going to restart again this week. What we're looking at is the Aussie and the Kiwi projections for the coming week as well. So I want to tune this session a bit more towards not just the traders, but also to longer term investors as well. So we look at a bit of a longer term projections and also the shorter term, medium term projections for the traders. All right. So let's get going. First up, I'll bring up the Aussie charts. All right. Give me a thumbs up if you can see my Aussie chart. All right. So we've got the Aussie here looking at the daily time frame again. We start off with that. The lines that I have there was from the previous week's analysis. What we've seen now is that it has broken above that resistance I had at 0.6194, I'll say 0.62. So with it breaking that resistance above, what I'll be looking for right now would be to add another resistance level quite quickly. I know this is very far away. This is at 0.67, so there's at least 500 pips apart. That's the major resistance level I would see there on the daily chart. I could think of another one more or less in there at about 65, 0.65. So those are my two levels that I would include at this point. Looking at the Aussie, it did not do as what we expected last week, which was to react to the 0.62 level before coming back down, which is why I had the red line there. Instead, it broke through the resistance heading towards 63, heading towards 64 as well. So at this point now, we're still looking back at the Aussie. I have indication telling me that it looks like it might start turning back down. It's heading into the overbought area. Looks like it's trying to come back off overbought. Fast MACD looks like it's trying to turn back down. You know, it's stalling for the past couple of days. It's been stalling at that level. So I'm still looking at Aussie as an overall downward move. I don't believe, well, I don't think that the upward direction is going to be quite sustained. It could come back lower. That's the longer time frame. I would still look for it to test 62 before heading lower. At this point, although there's a bit of a 100 pip move in there towards the support level, I wouldn't be keen to try and trade it down to that level. I'll wait for it to break that level before selling confidently downwards towards the 60 and the mid 50 levels again. So we're looking for triggers for that to happen, for it to push prices lower below the 62 support level and further down. Okay, that's the longer term projections in terms of the daily chart. On the H4, you know, we've already seen indication here that the downward move is likely to start happening. If I put a vertical line in there to help you see better, can you see my vertical line? You know, the fast MACD has crossed over. The slow one is trying to cross over a bit. So we could see, I really do believe that we could see it taper across for a while before breaking that 62 level and then heading lower. Okay, so my objective right now is to see it go to that support level with that move downwards. I'll be watching that first move to the level, to the support, before trading that bigger move downwards. I forgot to mention that if you've got any questions or any comments, please leave it in the chat. We have Jonathan, Jinwei, Daniel, Kenneth or watching the chats as well, and I'll look to them for some discussion points later in this video. But does that make sense to you now? Just looking at the Aussie, where we are looking for it to move downwards. I would sit and wait, look for it to move downwards to 62, to break below 62, and then trade it from 62 downwards. Does it make sense to you? Give me a yes in the comments, or give me a thumbs up if it does. It makes sense to Daniel. Only one person's understanding it. All right, okay, cool. So moving from Aussie, we've got Kiwi. All right, same thing. Kiwi actually has been a little bit better in terms of what it's been moving, is that although it didn't do exactly as what we expected for it to turn back down as of last week, it's gone up into that resistance level. It is still at that resistance level. Don't try and overthink it to see that it's broken out and then we're starting to buy. I would still think of it as in that level of 60.5.48, right? No, 0.6048. I'm getting lost in all the numbers. So at that level, I'm anticipating that if Aussie is going to be dropping lower, we could also see the Kiwi reacting to that resistance level and then dropping lower as well. So what I'll be more keen between the two, looking at Aussie and looking at Kiwi. Actually, put it in the chat. Looking at Aussie and looking at Kiwi, what I've just described about Aussie, would you be more keen, or do you think a move will happen faster for Aussie, or do you think a move will happen faster to Kiwi? Which one do you think will happen sooner? Robbie says Aussie, Tommy says Aussie, Derek says Kiwi, so I've got 2 and 1. I've got 4 saying Aussie, or 5 saying Aussie. Most of you are saying Aussie US. Howard is saying Kiwi. All right, okay, so Derek and Howard is thinking what I'm thinking. All right, you guys, I'm not saying that it's right, I'm not saying that it's wrong. I'm just saying that you're thinking what I'm thinking, because how I'm looking at it in terms of comparing the Aussie and the Kiwi is that if the Kiwi does break below this level, if we look at even just a 50, 60 pip move downwards, we could be looking to sell, and if I do sell at this point, I'll be risking maybe, let's say, maybe 100 pips to try and make even 300 on the longer term, right? So I'm looking at a 1 risk to 3 reward. I've got quite a good risk reward at that level. If I flick it back to the Aussie, even on the daily chart, we needed to move down about 100 over pips. To break that level, we need to move about 200 pips before I can even think of selling it down. So which one's going to move faster? Which ones are we going to be looking at a possible trade sooner? I would actually be thinking that the Kiwi will be a likely more quicker trade that I'll be paying more attention to, right? So it's closer to the support. If it does break lower, it has more chance of it breaking below that support level before heading lower downwards, all right? So as a quick summary, between the Aussie and the Kiwi, right now I will be looking at what is going on in chat, all right? So between the Aussie and the Kiwi, I'll be looking at the Kiwi for it to break below the 0.6048 level towards the 5-6 level. Then I will start looking at the Aussie dollar for it to break lower again. Looking at the Kiwi and H4, we can see that it's quite likely it's really sitting in that resistance zone, all right, that we have it there. It's sitting in that zone. If it does break lower, I could see it one level at that point at 58.40, and then the next level at 56. So between the two, I'm relatively more keen on the Kiwi rather than the Aussie dollar. Does that make sense to you, or at this point? Awesome, awesome. Okay. So, normally you're all going to ask me, wait, what's the trigger? What's the trigger that's going to be likely to push Aussie lower or Kiwi lower? Let's look at the Forex Factory, looking at news. Hey, great, Amy. We're happy to do this to help you understand better in terms of selecting which trade to do. Today is Easter Monday. There is pretty much nothing happening in terms of news. Everyone is on holiday. I hope everyone is staying home and not on holiday, going out spreading viruses around. So everyone's on holiday. Anticipate that the market is likely to be a little bit more quiet, a little bit less volatility, although we did have a deal being struck in OPEC in terms of oil. I will not tell you about that now. I will tell you about that later at our 1 p.m. weekly call, and also when we talk about oil on Friday. So remember that we also have on a side note, remember that we also have a 1 p.m. weekly call. That's only to people in the Traders Club. That's a private call only for people in the Traders Club, where we'll be going through a weekly analysis of all the different currency pairs, looking at signals, looking at previous news, looking at what's coming up as well. We have traders from all around the world contributing to that video. All right. But coming back into what could move Aussie or Kiwi lower. On Tuesday, again, not much happening. We got some Chinese trade balance, that's not going to move the market that much. On Wednesday, we have US retail sales. I can tell you it is going to be terrible. US retail sales number is going to be the worst that we've seen. It's at minus 0.4. They expect minus 5. It's at minus 0.5 previously. They expect minus 8% coming up. It could even be worse. So because of these numbers, we could see very short-term fluctuations of the weakness in the US dollar, but that is to be expected. On Thursday, we see Aussie employment change numbers. We are likely, on what they're projecting, we're likely to see employment change drop significantly from 26K to minus 30K, from an unemployment of 5.1% to 5.4%. So I think that could be the trigger that pushes Aussie lower, right? Would it come out at 5.4%? Hey, I think it could even come out at greater than 5.4%. Employment change could even come out at even worse than minus 30K. So on Thursday morning is probably where I see the Aussie dollar starting to move lower as we see the bad news coming out from the Aussie economy, right? We have unemployment claims in the US. That's going to be terrible as well. Friday, we have the Chinese GDP. That could also push Aussie lower because China is one of the Australia's biggest trading partners. So if Chinese GDP is going to suffer, a lot of imports, a lot of exports from Australia to China is going to suffer as well. Consumption will decrease, so exports will decrease as well. So we could see the Friday news as another possibility to drive Aussie prices lower. So, we have a few triggers coming up this week. Apart from that, we could see markets being slightly quiet. So it's probably going to sit there a little bit quiet before dropping significantly, sitting there a bit quiet before dropping significantly again, because we see that the news are quite spread out. I've rattled on for a couple of minutes now. Do you have any questions before we move on to the next segment of this? Any questions, anyone? No questions. I see everyone looking everywhere apart from their cameras. So it looks like there's no questions. Okay, so I knew that today's session was going to be quite short and sharp because not much happening in terms of the charts. And it was Aussie and Kiwi. We touched on that quite quickly. So I actually posted, oops, take that away. I actually posted this up. Can you see my Facebook page? Yes. Okay, wait, before we get on to that, Tommy said it seemed Aussie and US weak this week, so which is weaker? Tommy, I would say that while they are both weak, we could see US being weak, but then with every news trigger that I mentioned just then in terms of the employment and the Chinese GDP, we could see it pushing Aussie weaker at that point in time. So while US is going to be weak, it's also going to affect the Aussie dollar, and Aussie dollar is going to be likely to come lower as well. All right. Cool. So knowing that we were likely to have a quite a quick session today, I posted this in the LCMS Traders Club, only for all the people there to comment, where I was going to answer their questions about trading. So let me zoom in a bit so it's easier to everyone how to read. All right. So before that, last week actually, Louis asked me a question about how to handle or deal with FOMO. FOMO is the fear of missing out, right? When you're trading, you get into a trade and you get out, and then or you rush into trades, right? Scenario is when you rush into trades, jumping in, getting emotional because you think that the market is moving. You want to catch some profits. How do you deal with FOMO? Because what normally happens with FOMO is that you end up jumping into trades that you shouldn't have, making bad trades, right? So how do you avoid that? Several steps I would suggest is, one is for sure, understand that you will not catch every trade, right? You set yourself a schedule of how long you're going to be trading for, and then a target for that period of when you'll be trading. So if, for example, you're only trading 3 hours a day, realize that you're not going to make $3,000. Okay, depends on your trading account, but you're not going to make $3,000 in that 3 hours, right? You're going to be making set aside a reasonable amount, or in terms of pips or in terms of dollars, and then take it like a job. Make that amount of money, get out, and be happy, right? So one is setting aside time and also expectation for that time. Another way of dealing with FOMO is also understanding that your strategy is your idea of trading is really just to make another source of income. It's not there to be a gamble where you catch every big income move that comes around. So my two things about dealing with FOMO is, understanding your time frame and your expectations, and also overall longer term view of what you think of trading as, right? For me, myself, when I trade, once I close a trade, I don't actually care where it goes after that. Right? It might go shooting. I close my trade at a profit. It continues going further into what could have been potential profit. I'm not even bothered anymore because I'm happy with what kind of profits I've realized. Okay, so I hope that makes sense to everyone else who's here. Louis is not here on this call, but it's recorded, so he'll catch on to that next. Let me see what other questions. Okay, on top of his current question, he's going to advise on how do you and your team prepare trades, watch lists during the weekends while reviewing your trade journal. Okay, that's a very good question. How do we prepare our trades, our watch lists during the weekends while reviewing our trade journal? I'm going to actually throw that over to Daniel, because Daniel does a lot of the trade signals. He plans his trades. I would say he's the most hardworking trader amongst all of us because he's constantly watching at the chart. Daniel, how do you prepare your trades or watch lists during the weekend?
Okay, so actually it's just the same. I just use the 5 steps. I monitor. I'll look through what's previously the news, what's coming the news, what could have happened, what could happen, and then I plan the stage as well. So for example, what Jin has mentioned, the New Zealand dollar, I actually was looking at that as well. Before that as well, I will also adjust my support and resistance based on the latest data, and I'll adjust accordingly. And then I use the 5 steps to see what possible trades could happen based on the news coming in or previous news. I will also see, for example, the New Zealand dollar. It was the same thing as well. Well, that's no surprise. Gene is my mentor, so it should be the same. If not, he will be whacking me again. But the New Zealand dollar, yeah, I was waiting for it to break. If it breaks, I would actually issue a signal to sell, and I'll sell myself as well. Or if it goes up to a certain level, then I will also sell a signal to buy. It's all fixed steps based on the 5 steps. It's very, very simple. Those who are in the LCMS Traders Club, if you do remember last week, I was preparing how I prepared for the US CAD. I guess, it's not a trade, but I guess an idea of what's going to happen if it goes below a certain stage because of a possible oil deal itself. If it comes early, then you can actually do a sell. That's how I prepare over the weekend as well. So no difference from 5 steps. It's still 5 steps. I go at a higher time frame, and usually the 4 hours and the 1 hour still. No difference.
Awesome.
And then Then one more thing is, once it hits, I will just take the trade and don't think about anything else. So I'll take out all the emotions out. I'll try as much as I can. Okay.
Awesome. Thanks for that, Daniel.
Yep.
Why I threw that over to Daniel is also because I don't journal my trades anymore. I review my trades as and when I go. So I don't have a book or 10 notebooks beside me journaling my trades. I don't review trades on weekends. For me, how I take my weekends is I don't even look at trading. I do everything else apart from trading on my weekends, because on my Mondays to Fridays, I'm pretty much all the time in front of the computer trading. I'm watching my charts. I'm looking at the news. I'm reviewing everything. So weekends is my turn off time. I don't look at my charts there. All right. So I hope that answers your question again. Based on your 10 years of experience, what are your key factors when making a proper judgment on your fundamental analysis? I don't think I understand that question. Anyone understands that question and want to contribute? Kenneth?
Maybe I can chip in.
Okay, Jordan?
Because I think fundamental analysis is not as straightforward as technical. Okay, so I think what he's saying is that we always talk about how price can go this way or this way, and how do we use the fundamentals to actually create a bias, whether it's going to go up or down. And sometimes it can be rather mixed, like we always wait for the next news release or something like that. So amidst all these news, sometimes a particular currency may have conflicting news. How do we actually come to a conclusion and make this proper judgment? And based on all this mess, what are the factors you look out to actually create a bias before you start trading? So I think that's what he meant.
Oh, so you're telling me what he meant. You're not going to give me the answer.
Yeah, you asked what he meant, right?
Okay, fine. I was waiting for your answer. All right. So how do you figure out which ones to pay attention to? How do you focus on which currency pair or which fundamental news? I've actually given you all the 7 news to pay attention to, because those are the most likely ones. Those are the ones that are most likely to have a consistent result. Good news is most likely to go up, bad news is most likely to go down. If you pay attention to any other other fundamental news, those will have a lot of different contributing factors, such as weather, such as economic situations, such as employment. All the different factors will come into, for example, retail sales. So those news that I've highlighted to you in the Traders Club before, those are the ones we pay attention to. News sources, I'll only look at Forex Factory. From there, after reading it, I will start looking into other avenues such as Bloomberg or Twitter sometimes, but mostly those 2. And then I don't set notifications for my news because I'm watching it all the time. But in terms of for you, when you're not trading full time, if you are unable to be on the ball with the news all the time, few things you should be doing. Check out my blog, Forex Trading Asia, where we summarize the news coming up for you. We summarize all the levels for you as well. join the LCMS Traders Club, where we not only summarize it, we explain everything, we send out signals and tell you why we think it's likely to move higher or why it's likely to move lower as well. So I hope those answers your questions. Yongjin asked, do you compare indicators on different time frames? For example, same downward crossing of MACD on M15, H1, H4. So Yongjin's on the call. Yongjin, I do not actually compare across different time frames, because one of the things that's likely to happen is that you look at it on different time frames, then you start getting confused on which picture you're trying to enter your trade on. So if I'm looking at a trade on H4, I'll be looking on H4 only. I make that decision based on H4, or a decision based on H1, or a decision based on M15, not a decision based on H4, 1, and 15. Right? So that's a very common question, and we say it now and we say it again, focus on that one time frame that you're going to enter that trade on, rather than try and scroll downwards to try and get a confirmed answer, because there's no confirmation. It's just about the likelihood of a trade. Ho-Soon asked a question, how does oil price affect safe haven currencies such as USD and JPY? Euro is also considered safe haven currency. Oil prices affects safe haven currencies depending on the price of oil, all right? So it doesn't always have a direct correlation to US dollar or yen in terms of the movements, in terms of a safe haven, depending on its price. So when I saw Ho-Soon's question here, I actually did a bit of a research. I found quite a good report. It's 22 pages, PowerPoint form. It's not mine. It's something I found and downloaded. So if you are interested to find out more about it, I'll send it to you. Just put it in that, just reply there, put your name in there, and then I'll forward out that report to you as well. Okay. So quick answer is oil price does not, it affects safe haven currencies such as USD and JPY, but it will depend on the current price of oil. So it doesn't affect it all the time. It only affects it depending on the prices. All right. Euro, I would say it used to be quite a good safe haven, not anymore, as we see the economic environment of the Eurozone suffering a bit. So it's not really considered such a good safe haven. US dollar and JPY is still the traditional safe haven currency. So Robbie, hi, give me a wave. All right, Robbie's question is, how do you grow your account? Slowly and stagely, right, without getting over ambitious. Well, really take it step by step, grow your account by accumulation rather than, a big lump sum thinking that you could make a big windfall. Should we target a specific amount of trades or a number of trades per day or per week? I wouldn't set a specific number of trades to hit, but I would say that you should have a number of trades that you should not hit. Right? So I'm not going to say that, hey, Robbie, you have to do 5 trades a day. But I'm going to say that if you do more than maybe 3 or 5 trades a day, something's wrong. So does that make sense to you? Because if I say that you need to do 5 a day, you're going to start throwing in random trades. Even if there's no trade, you go, oh, Jin says I need to hit 5 a day. So you start entering trades. But if I say that you should find the best, not more than 5 trades a day, then those are you're going to find very good trades that fit your strategy, fit your setup, then you enter that trade. Make sense? Cool. All right, part 2 of your question is, should we set a target, an ROI target per month? You should set an ROI target per month, because that keeps you accountable. It keeps you on the ball. If you're going to say, oh, I don't care, I'll make whatever I make on a daily, on a weekly, on a monthly basis, then most of the time you're going to end up spending more time on Netflix and doing anything else but trading. So if you set yourself a target, you say, hey, I want to make 5%, 10%, even 20% a month, you know, that target is there for you to work towards. Whether you hit that or not, you know, if you don't hit that, come back, we can review, we can do a questions, we can look at your trades and figure out why you're not hitting that or how close you can get to it. But if you don't have a target, we don't know what you're working towards. So it's always good to have a trading target. All right. Last question, is it true that your account, as your account grows, your ROI drops? It shouldn't. It shouldn't, because you're still doing the same trades. You know, as your account grows, you should be trading slightly bigger. Your trade sizes will increase in proportion to your account. So you might not be doing more trades, you might be doing bigger trades. So your ROI should still be relatively similar. It shouldn't actually be dropping. Very good questions there, Robbie. Thank you for that. Tommy's here as well. Tommy, how many trades do you have running a day or make a day? How many trades do I have running a day? It really depends on the day. There are days where, you know, market is jumping, popping around like popcorn in a bucket. You know, I'll be entering trades, I'll be firing trades, very short term, in and out, a lot of trades in a day. There are days like today where I'll probably not make a trade. I'll make one speculative trade or one or two speculative trades to see what happens. So how many trades a day? You know, it really varies depending on the market. How many is too many or too few? Really, Tommy, I would say leave it to the market to tell you how many trades you can do. Main thing is make sure it fits your strategy, make sure it fits your 5 steps. Then we can enter trades based on your strategy rather than enter trades based on a quota. Similar to the question I answered for Robbie earlier. Okay, you sell, stop, and buy limits. Daniel will do a call with you to show you that on the chart. I think that'd be easier. Hosun again asks, nowadays situation depends on, oh, well, I actually answered that. That's a market analysis question we will cover in the weekly call, which is happening at 1 p.m. today. All right, so at 1 p.m. today. So went through quite a bit today. We looked at the Aussie, we looked at the Kiwi dollar. We answered quite a very good questions in here. So I'll just remind you again, this is the LTMS Traders Club. I will be posting, I like the questions coming out from these posts. So I'll be doing this a bit more often, where I'll be putting this up, you know, you ask your questions and then I'll be answering them at the next videos or whenever we get the chance to do a video like that again. So please stay tuned, you know, put your questions in the comments below, and then we can help you through those trading questions as well. Tomorrow, I'll be talking about the euro. Tomorrow at 11 o'clock, I'll be talking about the euro. And then, and all the other currency pairs after that. But main thing is, I hope to see you back here again in an hour's time at 1 o'clock, in about more than an hour's time at 1 o'clock, where we'll be going through the whole weekly view of the markets, every different currency pairs. You get to hear more from everyone else in the traders coaching group as well. Okay, so take care. I'll see you again shortly. Thank you. Bye.